The earnings season, I have to say, unfortunately, viewers, is not starting off on a very great note, but let's wait and watch how it shapes up. Thanks for tuning into the trade setup today. I'm Neeraj Shah. And the global news flow first, oil has extended losses after tumbling below 100 on demand concerns. The point that oil has been hovering now, not at normalcy level of 120, but at normalcy level of 100, is actually a good sign. So oil keeps on now coming back to this $100 per barrel mark on demand concerns, which is great from an India perspective. It should be staying as low as possible. Google, the Alphabet CEO has said that Google is going to go slow in hiring for the rest of the year. This is not a normal company. This is Alphabet, one of the largest companies in the world, saying that they're going to go slow on hiring. Is there a sign of things to come in the global economy? Remember, I think IMF has downgraded the US economic growth as well to about 2.2%, if I'm not wrong. India IIP growth has strengthened to 12-month highs of 19.6% YOY in May, in line with expectations largely. And most notes suggested that this might be a one-off. It may not necessarily be a depiction of the actual growth in the economy. Be that as it may, the reported IIP number, not bad. What does all of this mean for markets? Well, the US markets had a slightly rough ride because they were doing okay for a better part of the early trade, and then went down to about 1% lower. So not the best of closes, and the futures to indicate a start, which is not very, very great. Keep in mind, today's the day when the US inflation numbers come out, and therefore the markets would be kg ahead of that. I think everything else, Bitcoin continued to slide lower, dollar index continued to slide higher or move higher, and US yield at about 3.16. So in terms of Qs, you don't have great outcomes, aside of the fact that commodities have cooled off, and that should be net positive for India. The CPI inflation print by the way, actually, if you can get the SGX Nifty first, and then we'll go to the CPI inflation print as well. This is the SGX Nifty, which indicates a mildly bullish start, about 55 odd points. So this is hovering around that range, support range. The other Q that came out post market hours yesterday, in addition to IP, was the CPI number, right? And here's Kotak Bank's view on June CPI data. They said that the CPI inflation broadly remained steady around 7%, bringing the first quarter average to 7.3%, marginally lower than RBI's projections. Nonetheless, they believe inflation is expected to remain elevated with only a gradual descent through the rest of the year. While the softening global commodity prices provide some relief, the gains will be limited due to weakening INR, and that's a big point. They expect the MPC to continue to front-load policy rate hikes, especially as the global monetary tightening continues, 85 to 110 basis points. So largely, the print yesterday not doing anything dramatic to change what the market believes, at least, the Reserve Bank of India will do. So in light of all of this, what's the trade setup? I think Nifty is still in that key support range of 16,100 to 16,000. So no big changes there. It keeps on now finding support at that level. The commodity price fall certainly augurs well for a risk on sentiment, but the US inflation print overhang remains for today at least. I do think the risk reward remains skewed towards the bearish trade on the index, but well, let's wait and watch if that shapes up. Results today include a Mindtree and a Tata Metallics, so we'll be watching out for those two today. Particularly Mindtree. Actually, both of these could be impacted in some fashion by either outlook or the reportage, because IT, frankly, has not had a great reportage thus far. So we saw what happened to TCS and the tumble that it gave to Nifty IT. Now maybe the tumble might be in the price already, but HCL Tech numbers don't inspire too much of confidence. Revenues rose about 3.84, which is actually good news for HCL Tech, at 23,464 crores. This, to my mind, could well be the stock of the day, even though a bit of a correction has already happened. But let's wait and watch. So the Bloomberg estimates were 23,410. So mildly, actually, you would say largely in line with estimates. But the EBIT at 3,992, again, compared to estimates, largely in line, but a 1.89% fall. EBIT margin coming in the lower end of the band. That is the problem at 17%. The expectations were largely around 17%. In some brokerages case, even 17.6%. So the issue with HCL Tech, I reckon, viewers, is the fact that the EBIT margin has come in at the lowest end of the range. The net profit fell about 8.6%, 3,283 crores. The expectations were 3,325 crores. So there, to largely in line on that base, really. The problem, though, as I said, seems to be that the margin expectations and maybe post the con call, the call from most brokerages is not very benign. So Morgan Stanley, for example, they maintain, this is a rare brokerage which has maintained the equal weight and a target price of 1300. Everybody, as I can tell you, has had found some chinks in the armor. So Morgan Stanley says the revenue beat in first 1Q was more than offset by a margin miss and expectations of FY23 margins towards the lower end of the band. They say that the company requires sharp execution to manage margins, and they believe there could be downside risks to this ability to manage margins and ability to sharply execute. They see consensus FY23-24 margins coming down, driving EPS estimate cuts. They have lowered the FY23-24 EPS by 7 to 9% and target price by 9%, and they prefer Infosys over HCL Technologies. Now we need Infosys to guide well and do well for IT to find some semblance of sanity. Remember, this week is also Mindtree plus LTI plus Tata Elxsi plus an ERE company at LTTS. So there's a bunch of IT conversation that will happen during the rest of the week as well. But yeah, watch out for HCL Tech today. Nomura, in fact, has cut the target price to 1,000 rupees. They see the margin miss and the deal wins hit in Q1. Though I thought the deal wins probably looked okay, but maybe the quantum of deal wins, according to Nomura, is lower. They see HCL Tech likely missing its margin guidance in FY23. That could be big. The deal wins, well, they do say that there is a hit, but it still remains healthy. But the FY23 revenue guidance has lower risks, according to them. So they see no reason to worry on the revenue side, but on the margin side and therefore on the bottom line could be an issue for HCL Technologies. Frankly, just look at everything else, viewers. Every other brokerage on HCL Technologies has, you could argue, that has looked iffy. Credit Suisse has outperformed. The target price has been cut to 1110. Jefferies has a hold with a target price of 980. Bernstein has cut the target price to 1040. Goldman Sachs is neutral with a target price of 976. Citi, the target price has been cut to 910, and they lowered their estimates and the target multiple as well to 17 times. So no issues. Whenever the growth rebounds for these companies, by the way, companies like HCL Tech could well do well, because at 17 times, 16 times, they're probably trading broadly in line with the long-term averages. They're not very expensive compared to some of the others, but the growth is honest. We'll be talking to the management today, and you will be able to hear from them firsthand as to what they have to say about this. At 9:30 a.m. we'll have C. Vijay Kumar and Pratik Agarwal on BQ, so you might want to tune in for that. Okay, that aside, let's move on to some others. So other companies in focus or other stocks that should be monitored. Sterling Wilson Renewable Energy, not the best of numbers. You'll probably see this stock maybe reacting a bit to its numbers. Delta Corp looked okay actually, but never know what could be in store. The big bull, remember, has been constantly selling. Delta Corp revenues up 15%, EBITDA margin 35% versus 32%, net profit up 19% at 57 crores. So not too many faults with these numbers, but let's wait and watch. Remember, you also got to factor in that this quarter is expected to be strong for QSR and hotel companies, maybe casino companies. So in light of that, a 15% growth is okay. Having said that, I think a lot will depend for this stock on what the GST ruling is. So until that is out of the way, not too many aggressive positions will get taken here. Anand Rathi Wealth Services, again, I've compared it QOQ because I don't see a seasonality element here, but revenues up 17%, EBITDA 20%, EBITDA margins 42%, net profit up 15%. You couldn't find too many falls with this number. So okay set of numbers, yes. Oil has fallen, so ONGC and Oil India would probably remain in focus, as also some of the other upstream companies. So do watch out for those names. Some other stocks in news include Mahanagar Gas, which has raised prices of CNG by 4 rupees per kg and PNG by 3, or Deepak Nitrite. This could be big for the stock. The Gujarat Pollution Control Board has revoked the closure order for 3 months in Nanseri, Gujarat. It's only for 3 months. That is interesting. But you might well see the stock react today. Care Ratings, the company will consider proposal for buyback of shares on July 20th. Watch out for this one. You could well, it's not a very liquid stock, Care Ratings, viewers, so keep that at the back of your mind, but could be interesting today. Shilpa Medicare, there's a newly commissioned facility for manufacture and testing of orodispersible films and transdermal systems situated in the Baspet in Bengaluru has been issued a GMP certificate by the UK MHRA. It's not as big as US FDA, but there's a GMP certificate by UK MHRA. Maybe the stock reacts a bit. By the way, remember today onwards, Ruchi Soya will become Patanjali food. So for anybody invested in that stock, keep that at the back of your mind. Lastly, I want to leave you with uh, an interesting piece of detailing by Motilal Oswal on the mutual fund positioning for the month of July. They've come out with a note, and they say that on a month-on-month basis, the weights of uh, the weights of in automobiles, oil and gas, consumers, healthcare, telecom, and PSU banks have increased, while the weights of private banks, metals, NBFCs, and all of these sectors, the other sectors, have come off. Chemicals have moderated as well. Automobiles weight, interestingly, is increased for the third consecutive month to a 42-month high of 7.6%. That's large, right? That's really large. It ranks third in the allocation of mutual funds. It was in the fourth position a month back. So autos, clearly everybody seems to have increased weightage. Oil and gas weight stands at an 18-month high of 7.3%, which is also a slight increase. The metals weight moderated to a 26-month low of 1.9%. You know where people are not building in positions, at least thus far. And 4 of the top 10 stocks in terms of value increase were from autos: Maruti, M&M, TVS, and Motherson Sumi. Wiring, interestingly, a non-auto and an auto ancillary name. So this is where mutual funds, at least, have built up or reduced their positions on a month-on-month basis. Very interesting study. Whenever it comes out next month onwards, we'll try and bring it. And what we'll do is we'll try and compare what happened in the month of July versus what will happen in the month of August. So interesting piece of information. Do try and think a little bit about this as well. Never net expect to be a flattish kind of a day. It may start off higher, but don't see it going much higher because of the US inflation print slated to come out later today. So the world markets will be quiet. Don't expect India to do materially different. I still believe that the risks are skewed towards the bearish side, but you never know, the markets may surprise. I just mean bearish side, I mean for a very immediate trading position, not really from a slightly medium term perspective. Thanks so much for tuning into the viewers. Have a safe day ahead.